Hello everyone, this is Paul Paquin here at Golden Financial Services. Today we are going to speak about private student loans, and once you understand how complex these loans are, this will help you to understanding the complexity of these loans will help you to understand how debt validation is possible. Debt validation is where you challenge the legal authority of a debt collection company's right to collect on a debt. And if they can't prove they're abiding by all of the federal laws, if they can't prove that they have all of the accounting from the day that you took out the loan, they need to show where every single penny went that you paid, and everything has to be accounted for. There has to be a paper trail for everything. Every single action that took place, there needs to be a paper trail showing that. What services are included in your payment? What are you paying for? Everything needs to be accounted for. And with private student loans, okay, they're not like federal student loans. With federal student loans, they simply originate from the Department of Education, and the Department of Education gives you the money. Very simple. With private student loans, they originate with the bank, like Chase, Bank of America, City Financial. However, shortly after the bank lends you the money, the loan is transferred to an entity called the National Collegiate Funding LLC. And this company has no function aside from holding onto the loan until it's transferred into the trust. Okay? Now, in technical terms, this company is called the depositor. They don't collect your private student loan money, nor do they take any action whatsoever. And again, all they're simply doing is holding onto the loans until they're deposited into the trust. And who collects the money? Someone has to collect the money on your private student loan payment, right? You're sending that money each month. That you're sending the payment. Who's collecting your money? And if it's not the depositor, it's not the bank, who is it? Okay, the answer is the servicer. The servicer actually collects the money. And the servicer is, just to give you an example, that's like Sallie Mae or Navient. And the servicer is the company that collects the money on your private student loans, but they are also the ones who send you the bills each month. They handle all the accounting. And in return for this work that they're doing, the servicer gets paid by the trust that owns the loans. National Collegiate Student Loan Trust, that's just an example of one of the trusts. There are several trusts, and it's hard to tell what trust owns your loan, but we'll get into that. Just let's explain first, what is the National Collegiate Student Loan Trust? Okay, so there's more than one trust, of course, as I just mentioned, and in fact, each trust is identified by using some type of numeric code. For example, you have the National Collegiate Student Loan Trust 2007-3, and then you have the National Collegiate Student Loan Trust 2007-2. And there's many of them. These are just two examples. Each trust holds a bucket of private student loan debts, and there are sometimes thousands of loans in each trust. And these loans have worked their way from the originator to the depositor, and then, of course, into the trust. Now, in fact, National Collegiate Student Loan Trust 2007-3 holds on to approximately the face value of this bucket, this trust of private student loan debt equals $1.4 trillion roughly. Okay, huge amounts of private student loan debts are held in this trust. Now it gets even more complicated. What happens to the loans once they're in trust? Once the loans are safely in the hands of the National Collegiate Student Loan Trust, or whichever trust owns your loans, bonds are then sold to investors. Now each bond entitles the investor to receive distributions from the trust based on the amount of money that comes in from private student loan borrowers. That means if there's a large portion of consumers, students, a large portion of students are behind on their payments. Okay, this will hurt the investor's return on investment. So if too many loans go into default, the investors don't make much money. Now, they minimize their risk by guaranteeing the loans. So there's a couple ways they do it, but the most interesting is the fact that the loans are guaranteed. And until 2008, these loan guarantees were handled primarily by the Education Resources Institute, a nonprofit organization that was one of the largest private student loan debt guarantors in the country, and they just filed Chapter 11 bankruptcy. Who owns your loan? I know we're still getting to that question, but we have to start at the beginning and explain the complexity of these loans. Now, it's difficult to say whether your private student loan is in trust. Actually, it's difficult to say which trust contains your loan because each trust contains thousands of loans, and though each loan is supposedly on some master list, it's virtually impossible to get the master list. If you request a copy of the master list from the National Collegiate Student Loan Trust, they will not provide it to you. And often the question is, do they even have the list? Does this list even exist? Supposedly, there is a master list. Much like the mortgage mess, there's practically no paper trail. Maybe there's some paper trail, but very little. And that's how debt validation actually works. People all the time ask, how can debt validation work? You know, I really took out the loan. It's not a question of did you take out the loan. It's a question of are your creditors abiding by the federal laws? Can they prove they are? And to me, it's like a scam. They get away with this. I mean, just look at the complexity of how these loans are created. Now, when someone is sued for a debt, any debt, some of what the creditor needs to prove includes that you took out the loan, that the entity suing you owns the loan and the right to collect on a loan, and that the amount of money that the entity claims you owe is the proper amount due. Can National Collegiate Student Loan Trust prove you owe the money? It depends on whether they can provide a copy of the signed promissory note. Can they provide a copy of the original agreement that you signed? Does National Collegiate Student Loan Trust own the loan and have the right to collect on the loan? It can depend, it depends on whether they can show that the loan went from the original lender to the depositor to the trust. But if there's very little paper trail included, how can they prove that? Is the amount they claim that you owe, is that amount correct? It depends on whether they can show a complete and accurate accounting of how they came to the amount they're claiming you owe. They need to show where every single dollar went to. Were added services included? Because that's illegal. And you can see on our blog at nomorecreditcards.com. Just click on blog. That's nomorecreditcards.com. There's a recent article on our blog that shows several different lawsuits. Bank of America was just sued. Chase was just sued. And a lot of the charges include details pertaining to what we're talking about today. So I definitely urge you to check out the blog at nomorecreditcards.com. And anyways, there are more issues involved in defending a private student loan collection account and lawsuit brought about by the National Collegiate Student Loan Trust. And if you need any questions answered, contact Golden Financial Services at 866-376-9846 and make it a great day.